Hello, dear students. Welcome you all to the 14th lecture of macroeconomics. And today's topic for discussion is measurement of national income, under which today we will discuss income method and expenditure methods. In last lectures, we have learned that how to calculate national income by value-added method. That was little bit complicated method. So income method and expenditure methods are quite easy in comparison to value added methods. So let's see how we calculate the national income from this income method and expenditure method. So income method is one another name is factor income method also, in which we calculate all incomes occurred to the basic factor of production used in producing national product. Means we will add all the income paid or received by individuals of the country. Okay, so this method approach national income from distribution side. So first of all, what we do under this method, national income is obtained by summing up incomes of all the individuals. So we have learned that 4 factors of productions are there in first semester when we was discussing microeconomy, and those 4 factors of production were land, labor, capital, and organization. And on behalf of these 4 factors of production, any individual get their rent or factor payments for their labor, okay, rent and compensation, interest and profit. So in these 4 ways that people get income, these from these 4 ways. So what we do under this income method, first of all, we divide our production into different sectors, primary, secondary and tertiary sectors we will divide. And in second step, we will classify the factors of payments. Okay, so classification of factors of payment is possible through these 5 ways. So first will be compensation of employee, which include wages and salary of employees, and employees contribution to the social security scheme, that is also considered. Second one, rent and royalty, if there is any rent or royalty is there, then how much is the interest coming. Then profits, so profit can be further subdivided into 3 categories: dividend, distributed profit and corporate income tax. And finally, mixed income of self-employed, because self-employed people are also generating some income from themselves. So that also we will consider when we are calculating the aggregate income of an economy. In third step, so first step was classification of different sectors, primary, secondary, tertiary. And in second step, from these factors, how much payment is classified into different people. So compensation will be there, rent, interest, profit, and mixed income. So in third step, what we will do, we will measure factor payments. Okay, so income paid out by each enterprises can be estimated, means each individual industry how much income they are paying. Okay, and to different 4 factors which we have discussed just now. And later on, what we will do, we will add all these payments, factor payments, by all the enterprises. So we are basically adding the payment made by individual industries to all its employees, household. Okay, so by summing up incomes paid by all industrial sector, we will obtain domestic factor income. Okay, and which is also called net domestic production at factor cost. And finally, from this net domestic factor income at factor cost, we will add net factor income earned from abroad, because most of the people, so many of our nations or our own people are working in foreign countries, so they are also earning something. So that income will be included, and the foreigners who are working in our country, their income will be excluded. So net factor income we will add in compensation to employee, rent, interest, profit, mixed income minus net factor income to abroad. Okay, remember this 2 and 4 from. Okay, this plays a very, very important role here. So this minus sign could be some, in some books you can see positive when they are saying net factor income from abroad. Okay, so that need to be very careful when you are doing numericals based on this formula. So through income method, national income will be compensation of employees plus rent plus interest plus profit plus mixed income minus net factor income to abroad. So this is the all 6 steps how we calculate national income through income method. Once again, I am repeating. In first step, you will divide the 3 sectors of economy. Then from each sector of economy, which all are the possible factor payments. So factor payments could be in form of compensation, rent or royalty, interest, profit, and mixed income. You will add all these incomes together minus what you will do, net factor income earned from abroad. You will get national income. Let's see one example I am giving you here. Some data we have like interest, rent, government final consumption expenditure, private final consumption expenditure, profit, compensation of employee, net factor income from abroad, net factor income to abroad, net domestic capital formation, net export, net indirect tax. So now you see here, there are so many formulas. Okay, so many data is available. Now if in exam he is saying solve national income by income method, that time you should know that which all data is of your use. Okay, there are so much data which is not used when we are calculating national income by income method, but that data we can use by some other method also. So we know what is the formula for national income. Compensation of employees, rent plus interest plus profit minus net factor income to abroad. Okay, here you see if net national income to abroad is 30, if this data is given like that, net factor income from abroad, so we will calculate this 30 to minus 30. So to and from is very, very important here. So read question very carefully. So when we are calculating national income, compensation to employee, that data is given here, compensation of employee 1000 plus rent is given 250 plus interest is 150 minus net factor income to abroad minus 30. So 2010 crore. This is our national income by income method. Okay, the same data we can use to calculate through expenditure method also. After that, I will discuss that formula which I told you in earlier lectures for GDP equals to C plus I plus C plus I plus government expenditure plus net export. So that is basically calculating GDP by expenditure method. So when we will discuss other method of explaining your national income, that time we will explain that thing. So third method and last method of measurement of national income is your expenditure method. So here what we will do, we calculate the national income by adding up all the expenditure made on goods and services during a particular year. Now whatever expenses are there, who do all those expenditure? Either household, means individual people, or industries, okay, or government, or sometimes maybe people who are staying in our country, they are importing something from foreign country, so they also do the same thing. And sometimes foreigners, they consume our products. Okay, so import and export plays important role here. So what we will do, we will add up all the expenditure here made by household, government, enterprises, and export and imports. Okay, so let's go through the theory very quickly. So expenditure method arrives the national income by adding up all the expenditure made on goods and services during a year. So income could be distributed as a consumable goods or capital goods. Consumable goods means which you are consuming, and capital goods like building, machinery, equipments, vehicles, tools means which these goods are used for further production. So there also sometimes that expenditure happens. And again, expenditure can be made by private individuals and household by or by the government and business enterprises. So all these four sectors, when we was discussing the circular flow of money, so these all four sectors plays important role, and they do consumption, and they do expenditure for consuming the goods and services. And further, people of the foreign countries spend on goods and services which country exports to them, and similarly people of your own country imports the goods and services from foreign country. So when we will add all these expenditure of household, government and productive enterprises, we will get GDP at market price. So formula is already we have discussed earlier. GDP at market price equals to C plus G plus I plus NX. It means your net export minus import. Okay. C is consumption, G is government expenditure, I is investment. So GDP we know, and earlier also we have learned from GDP to GNP, how we will get from GDP to GNP. We will get if we will subtract the net income from abroad, then from GNP to NNP, how we will get, we will subtract the indirect taxes and subsidies, then we will subtract the depreciation value, and finally we will come to NNP at factor cost, which will be equals to your GDP at market price minus consumption of fixed capital minus net indirect taxes plus net factor income from abroad. Okay, so GDP is there minus consumption of fixed capital, means that is your depreciation, minus net indirect taxes plus net factor income from abroad. The same thing which we discussed when we were discussing the different indicators of national income. So that time we discuss all these things there. So these are the three methods of calculating national income we have discussed in this lecture as well as in previous lecture. So value added method is there, which calculates net value which economy is net value of goods and services which an economy is producing. And then income method, where we are adding up all the income by different people, household, in the form of compensation, rent, interest, profit, and mixed income. And then we have seen the expenditure method, where we calculate the national income by adding up the expenditure of individual household, government, industries, and net export. So this is all for today's lecture. This topic is very, very important. Prepare it well. This may come in your exam also. And if you have any confusion, you can ping me on WhatsApp. I will solve your query there. Thank you so much for watching the video.